Thank you, councillors. I'd like to reconvene the meeting and Treasury management in mind.
Thank you, Mr. Chair. So a lot of the content in this report is, I guess, just reinforces the information that we've received from Mercer, but there are some additional points that I would just like to bring to the committee's attention, which really start on page 76 and under the update on change to investment fund placement. So at the committee's last meeting, they had approved the change to the manager of council's global passive equities manager, subject to agreement of management fees being no more than what we're currently paid. So we have confirmed those fees arrangements with Mercer, and they are less than what we had been paying previously. So we are now in the process of executing the documents to change that management over. One of the key pieces of work that the committee will be moving into imminently is that review of our strategic fund advisors. This is the role that Mercer play for the committee and for council. So we have initiated that process with taking a two-step approach to that. So first of all, to seek the appointment of an advisor to work with the committee and council through the review and procurement process because of the specialist nature of the advice that we're seeking. And then we will go through with that advisor the review of the strategic fund advisor. So we have last week put a request for proposal into the market with responses to that expected at the end of this week. From there, we need to have an evaluation panel to consider those responses and recommend the approval of that advisor to council. So there's a recommendation there from staff and in conjunction with the committee chair on the membership of that evaluation team. Noting that that includes Graham Naylor as the independent chair of the Risk and Assurance Committee as well, just a different perspective. The other point probably to note is within the report under from section 38 onwards, we've provided some of the feedback following discussions at the last committee around council attaining a formal credit rating and some of the observations that have come through from discussions with other councils who do hold that credit rating. The observation, I guess, in summary is it hasn't really imposed any additional controls or process. It leverages documents that council already prepares, but it does entail an annual visit from the credit rating agency to do that more in-depth interview process and gain the assurances that they need to determine what that rating would be. We've fed all of that back to PwC, and their advice is that we continue to monitor the situation, which is really the recommendation that the committee landed with, sort of keeping an eye on when the optimal time to attain that credit rating may be. Based on current borrowing projections, that's estimated to be later this year, but noting that that timing is really determined largely by progress with the Infrastructure Capital Works program, which we've seen is delayed and deferred. So we will continue to report to the committee at that point. And we have just provided for your information as well a request from the last committee meeting, the summary in terms of those councils that are members of or shareholders in the local government funding agency, those that hold external credit ratings and the agencies with which they hold those ratings. I'd be happy to take any questions.
Thank you, Janine, for that report. I think the credit rating agency is really probably we said last meeting, when not if, And it'll be interesting. I don't know how far out you take your borrowing projections in terms of financial years, but that would probably be a useful tool to have in our package when we're required to make that decision, because it's only a short term. It seems like the annual cost on this process will be 60,000, if I'm hearing you correctly.
Yeah, that's as we currently
so we need
understand
to
it.
make sure that the investment, if you like, is going to have a continuing payback, and it's not a short-term one. Sorry.
So the review will be sort of be a 12-monthly thing in terms of watching it, deciding whether or not it's worth our while. But you said when, not if. Yeah.
Yeah, that's correct. Yes, it's an annual review. It's like an audit. They just come in and make sure your systems are robust. And
no, sorry, in terms of the
In terms
decision as to whether or not we seek to get a.
Yes.
that's why I think if we've got a schedule of borrowings going forward 5 years or whatever the projections are, maybe long-term plan 10 years, so we can monitor it against that.
Yeah, so through you, Mr. Chair, we do have, when we do the long-term plan, the borrowing projection is obviously part of that. That's as part of our financial statements. I think that if we looked at where we were projecting from a long-term plan perspective versus where we're actually sitting, there is quite some gap between those. So I think it's something that we could and should do as part of the process, which is looking at through to the end of the financial year, but then we to refresh those longer term.
And in terms of the review of who our fund advisor is, that would ideally happen every 5 years. When did we last do it? I know we went through all this a few meetings ago. Right? Actually, it was last.
It was
term,
the
wasn't
last
Yeah.
traineum. From memory, the last formal review was probably was at least 6 years ago, if not more. And that resulted in a bit of an advisor appointed and a bit of a market scan, but not a full procurement approach. But the recommendation at that point in time was that Mercer were the organisation that was best positioned in terms of the type of investor that council is. And so we reviewed that relationship, but in that way. I guess that's the advice that I would be hoping, by having an advisor who can work with council, they can guide you through, does it make sense to do a full-blown procurement approach, or is there a different way of doing it to make sure you've done the due diligence, tested what needs to land, retain, is it a change? What?
Thank you.
If I can just comment, it is a very difficult thing to be dealing with. Like, it's very complex, and need a different set of skill sets to what we have around the table to be able to make that call. So I'm very happy with the process that Janine's initiated to.
Yeah, and look, I'm actually thinking about another organisation I'm involved with that, to the best of my knowledge, I don't exception, but.
I think I know which one you're referring to, but I think their performance has also been pretty good.
Yeah.
By comparison with.
Yeah.
So.
Yeah. Oh, look, I'm certainly not someone that would want to change if from my perspective, I just don't have the skills to really know that. So, yeah.
Thank you, Councillor Nebo. Councillor Dunbar-Smith.
Yeah, I'm not formally part of this committee and not up to date with everything. I just wondered about page 76, item 35, about council's borrowing. It's increasing from 30 million to 43 million to 67 million. I presume you're all aware of that and what the reasons for that might be. I just wondered, is it related to interest rates, or is it related to more capital works, and is it offset by rates rather than using the investment fund?
So through you, Mr. Chair, our borrowing program, as I mentioned, is predominantly tagged to our infrastructure capital works program. So if we looked at the financial performance report, the annual plan had a capital works program in the order of 26 million. What we do is we fund depreciation, which is 10 million. And so there's a gap, which is the bit that we fund through borrowing. The way that we repay that borrowing is that we fund our depreciation and just use that money to fund our borrowing program. The effect that that has is that no matter how that capital work is funded, we match the funding with the life of the underlying asset. So we create intergenerational equity. Today's ratepayers are only paying for the use of that asset that they have. They're not paying future generations need to pay. So in terms of those borrowing projections, they are I think lower than what we had projected from a long-term plan perspective, and they are well within borrowing limits that we have set within our Treasury risk management policy.
But they are at a significantly higher interest rate than they would have been a year ago.
The borrowing amount isn't impacted by higher interest rates. The interest cost that is reflected off the borrowing will definitely be higher than what we had seen.
So
but that's not reflected in that borrowing stated in there.
Will that relate into the need for higher rates?
Yes, it will.
Okay, so are there ways of avoiding doing that, or is the capital works already being spent?
No, so we are generally borrowing in arrears in terms of our capital works program. So that is the magic that I try and ensure happens, that we are not borrowing in advance of capital works occurring, because if we do that, we hold debt that we are charged interest on that we need to fund, and we've just got the money sitting in the bank. So the approach is generally we have enough cash flow within the organisation to be able to fund, and at the point in which we need to borrow, we will borrow, but not of works. So we won't borrow to that limit if we don't have to, if the works haven't been done to substantiate it.
Well, in the long-term plan, should we be looking at reducing the amount of works needed so that we don't hit those sorts of levels?
It will be potentially. I think, again, looping back to the conversation around our forecast, where we've been forecasting at a level and we're not able to deliver to that level. So being confident that whatever we are putting into those long-term plan budgets is what we intend to do will automatically feed through into the gap that we need to fund through borrowing.
Yes, it's just, I mean, we've heard from the investment community just before that interest rates are having a significant effect on possessions and people and things like that. So that's quite a significant jump in borrowing in a 2-year period, from 30 million to 67 million.
Yeah, and as I say, if I look at the current annual plan of a $26 million capital works program and call it $10 million depreciation funding, that has a $16 million borrowing component embedded within that, of being the difference between those two numbers. Now, we won't get there this year because we're already forecasting that down. So our financial management system should deal with this. What this is indicating is based on the information that we're getting from the organisation at the moment, what we understand from our annual planning processes for 23-24, which have been locked in, that's where the forecast would take us. We don't lock in a borrowing program against that. We lock in a borrowing program against our actual spend as we work through that time period.
So just finally, I guess, are we looking at interest rate costs when can we look at interest rate costs when we start the LTP process about what people are bidding for and what we need? Because obviously that's going to have an impact on.
That is all absolutely part of the process that we work through. The interest rate costs, though, are just going to be a consequence of the spend that people are asking for. So if we right size the spend, we should deal with the interest cost. Yeah.
Precisely. Yeah.
Yeah.
Thank you.
Through
Chris,
Mr. Chair.
yes.
I think it's a really good question that you've asked, Councillor, and I think it goes back to that tension between what some of the community want, what Councillor Kneebone referred to before as, you know, the work we need to do to help protect and maintain some of our communities, which is what's projected into the work programs ahead, which lead to some of these borrowing increases, versus kind of what is affordable for them to be able to pay. And the fact that we have carryovers from the past of work that hasn't been able to be completed that we keep bringing forward, which was that discussion that was before, at some point we've got to try and say, actually, what is achievable, what is realistic, and try to match those expectations of the community to what's doable, which will affect this very matter.
Thank you, Chris. And also, if I can just add to that, it's one of the reasons why I asked when we had our first long-term planning discussion that we actually go back and zero-base things, so that staff are being encouraged to go back and re-examine all of the projections and the needs for them. So that's a different subject, I know, but they're all connected, so that we can actually cleanse the books, if you like, and start afresh and have a new level of borrowing. And the projections that are there at the moment may well be, I don't expect them to be high, but they will be lower than what is currently being contemplated. So, and there's a number of factors that are built into there. And you probably weren't here when we had the discussions on the extensive spend on the software system, and that has to all be written off. So that would have been a direct cost on ratepayers as it was being incurred. So that's being put onto a borrowing program, which is spread through the value of the life of the project. And that's a logical way of handling those cost of doing that sort of project. Otherwise, you're having one-off hits to ratepayers, which with a long-term benefit, that's not the way things should be handled. I don't know whether that makes sense or not, but yeah. So it's a normal business practice which is being followed by the council in terms of this CapEx and borrowing program. It's critical that the CapEx is justified and wanted by ratepayers. It's not vanity projects. Put it that way. Thank you. Right, we have any other questions on that, sorry? We have a resolution, Treasury Management Monitoring Report to 31 March. I have a mover, please. Thank you, Stu. Seconder. Am I? All in favour? Carried. Thank you. Next agenda item is rates information to 31st March 2023. And once again, Finance Director is going to lead the discussion. Thank you.
Thank you, Mr.
Present
Chair.
the report and lead the discussion.
Yes, so this is just our standard reporting to the committee in terms of progress with our rates collection activity. In a nutshell, our year-to-date collection is really largely in line with what has been achieved in previous financial years. So there's nothing being signalled that is a concern around willingness or ability to pay. Talking with our rates team leader this morning and noting, we've noted in section 8 around online direct debit applications. Linda had commented that I think we're up to 53,000 ratepayers who are now paying by direct debit, which is actually a really significant shift from what we've seen historically. So it's about a quarter of our ratepayers paying by direct debit, which makes it a easy transaction on both sides, but that does have the consequence of more people moving to payment of their rates over the year rather than necessarily by the 31st of October, which is our annual rates due date. So we do see that shift happening. There's probably no other points that are significant to call out. In the agenda, we do note the delegation or authority that sits with the Chief Executive to write off rates that are considered no longer recoverable. And so this year to beginning of March, the Chief Executive has authorised $232,570 of those rates to be written off, largely where those have been statutory barred. And we also just note there in terms of the rates remission and ongoing commentary around the financial hardship remission, which we will formally look at and reconsider the approach through the long-term plan when we these slowly getting some more engagement and uptake in that space as well.
Thank you, Janine. Anybody have any questions of Janine on the rates information?
Just going to note item 14 that Waitomo obviously clearly has a high deprivation. Looking at 12% rate arrears compared with the others.
Yep. Thanks, Ben. All right, so if there's no further questions, I'd like to have a resolution. All right, thank you. Seconder, thanks, Angela. All those in favour? Against? Carried. Thank you. So we move to agenda item 12, Councillor, Chief Executive and Director expenses. Thank you, Janine.
Mr. Chair, happy for this report to be taken as read. It is there to provide, I guess, transparency and accountability in relation to these costs, both in terms of elected members, but in relation to the Chief Executive and Directors' expenses as well. So, I understand the detail behind the councillor expenses should have been circulated individually, so there shouldn't be any surprises for those numbers. Is there no surprises, or they haven't been circulated?
Some people were missed.
Okay, I'll follow that one up because I had. Thank you. Apologies for that. I had it had been done. Of the committee.
Thank you, Janine. Councillor Strange, do you have a question?
Just more of a comment. Yeah, just to follow up what Janine's just said, just around how things are categorised in the background and making sure they fall in the right category moving forward. So just for an example, the personal training budget, I know from experience that's something that councillors guard quite closely. So when something pops up in that column that isn't quite right, yeah, I just wonder if there's, yeah, if they maybe haven't been allocated correctly in the background, they're falling into the wrong column. Thank you.
Commonly called coding. All right, thank you. No further questions around the table. The resolution 12, Councillor, Chief Executive Director expenses for the quarter ending 31 March 23. We'll move with that, please. Thank you, Councillor Strange. Seconder. Councillor Kneebone just got his hand up more quickly. All those in favour? Against? Thank you. Carried. Right. Agenda item number 13, tenders board contracts from 1 January 2023 to 31 March 2023. And that should be page 100. Board. And once again, Janine's in charge.
Thank you, Mr. Chair. So again, this report is provided to the committee in terms of transparency for all of those procurement decisions that are made that effectively exceed the individual delegation. Directors in particular, so over $250,000. Some of these the committee will have seen through the last meeting that came through for council approval, where those contracts have a value of more than $2 million and a multi-year by nature, but this just shows the extent of activity that we see in this space, and that all of these have had consideration through what's called the tenders board, which is effectively of the executive leadership team that provide oversight in this space.
Thank you, Janine. Just a question on Simpson Grierson, plan change 1. Is that an ongoing court case that council's involved with?
So through you, Mr. Chair, that's the environment court ordered process. So working through submissions to the plan and mediation activity.
So that's basically an open-ended arrangement with Simpson Grierson for the look of it. and the environment court. So, sorry, I'm probably being a bit flippant. I know how these things work. Okay, thank you. Any other questions?
So we have no option but to be involved in that process as the proposer of the plan change here.
I understand that to be the case, but our chief executive might like to comment on it. I'm sure he wouldn't be involved if he didn't have to be. The council wouldn't be involved if we didn't have to be.
I guess the question originated around how big is the checkbook related to it, and I guess we have to do what we do in the process and with legal advice, but I'm sure Tracy's cognizant of time equals cost in this matter and is trying to minimise the amount of impact she has, and trying to make. I know she's tried to make sure one person instead of a team of Simpson Grierson turn up to some of the meetings.
Thank you, Chris. And it's one of the reasons why I'm, I guess, trying to take a very keen interest in some of the policy developments that we're doing at the moment, because there are further down the track ramifications of that if we don't get it right at this level. And I don't want to leave any legacy issues for council to deal with in the future if they can be dealt with appropriate at this stage in a commercial manner.
I mean, I'm not aware. It's interesting. I think the mediation part's either finished or about to be finished, and I'm hearing a huge amount of frustration from all the parties, yet no one has wanted to give anything away in that mediation process. Hence, it's off to the judge again now. So it's a hugely frustrating process, you know. What do you do? Yeah, it's a process we're obliged to follow, isn't it?
Yeah, if I could just add that on that particular plan change, the whole idea was having a collaborative stakeholder group at the front end was meant to try and resolve all these back end matters. Well, that didn't happen. With the forward-looking and thinking about the freshwater policy review, which is required under the NPS, which one of us talked about yesterday, I'm cognizant that the government is putting in freshwater commissioners who will have powers which should, in theory, avoid this environment court type appeal and only allow appeals to the High Court on points of law. But I can only presume that the government isn't providing the funding for that, and it would still need to be funded by us, but it should help stop a protracted environment court type process.
Thank you for that, Chris. All right, Councillor Nebo, you. So if there's no further questions, we have agenda item number 13, tenders board contracts, 1 January to 2023 to 31 March 2023. We have a mover, please. Councillor Strange, Kneebone, seconded. All in favour? Aye, thank you. Carried. Agenda item number 14, Civic Financial Services Statement of Intent. Once again, Janine, just
keep
notes
going.
all the way down page. Aren't you lucky?
The lucky is quite the word, but thank you, Mr. Chair. So this is the first of a series of papers that are included in the agenda around entities that council has a shareholding in, shares or council-controlled organisations. This one relates specifically to Civic Financial Services Limited, noting that we hold a notional interest in this company, 0.2%, value of $20,000. The scope of Civic Financial Services has decreased over time, effectively now that they are facilitating some superannuation schemes on behalf of staff in the local government sector. and really noted that instead of providing dividends to shareholders, surplus funds that are achieved are put back into those schemes through reduced administration fees. Super Easy, KiwiSaver scheme, and the scheme. So information is provided there in terms of the statement of intent for 31st 2023.
Thank you, Janine. Does anybody have any questions? If not, the resolution to the meeting. Item number 14, Civic Financial Services Statement of Intent. That should be 31 December 2023. Do I have a, it's been corrected. I have a mover, please, and a seconder. Thank you. Yep. Councillor Story. I'm not sure who came first, but it doesn't matter. Councillor Story and Councillor Kneebone, whichever way you want to put it. Councillor Kneebone, doesn't matter. All those in favour, please put your hands up. Against. Thank you. Carried. Item number 15, CoLab Annual Report.
So, thank you, Mr. Chair. Just as by way of background, so CoLab is the trading name for what some councillors may be familiar with as Waikato Local Authority Shared Services Limited. This is one of two council-controlled organisations that Waikato Regional Council are involved with. So CoLab is the vehicle for that collaboration and shared services within the Waikato region. And then we also have Regional Software Holdings Limited to be renamed in terms of collaboration at a national level, regional sector. So this report presents the audited annual report for the year to 30th of June 2022, noting the key outcomes that have been achieved by the company over that financial year. I'll just note that not all programs delivered by the company are relevant to all councils, and so certainly there are some in there that Waikato Regional Councils are not with, but see we are a shareholder of TT. And our chief executive is one of the directors of the company. So report is presented as required for acceptance by noting by this council.
Thank you, Janine. Does anybody have any questions on the CoLab report? He is not, so we have a resolution, CoLab Audited Annual Report to 30 June 2022. Adopted. Have a move for that, please. Looking on the right-hand side, thank you. Councillor Cookson. Second it. Councillor Story. Put the motion to the meeting. All in favour? Right. Against. Carried. Thank you. Agenda item number 16. We've got a CoLab 6-monthly report.
Mr. Chair, so this is really just the next reporting period. Obviously, with the slowdown in the clearance of annual report within the sector, these two things have landed in our agenda at the same time. But this is the update, I guess, for the first 6 months of this financial year from CoLab around their performance achievements to date for noting by the committee.
Thank you, Janine. At the last meeting I noted, and I haven't picked up on this lot, that there was significant expenditure on consulting, which was going to be addressed. Is there any update on that, or has that resolved itself? I couldn't pick anything up on these financials either as to why there's been any change. So maybe it's just disappeared.
Yeah, my apologies. I'll have a look back. I'm just trying to think whether it was CoLab or RSHL is the other one, because certainly with RSHL, the current resourcing model sees a lot of services delivered rather than staff, but make a note to have a look back. the last agenda.
Thank you. Anybody else have any questions on 6 monthly reports for CoLab? If not, the resolution is CoLab half-yearly report to 31 December 2022. Adopted. Mover, please. Thank you, Pam. And seconder. Thank you, Angela. Motion to the meeting. Those in favour, please say aye. Against? Carried. Agenda item number 17, RSHL 6-month report to shareholders, 1 July to 31 December 2022. Janine, once again, I'll hand over to you. Thank you.
Thank you, Mr. Chair. So as mentioned, this is the other council-controlled organisation that Waikato Regional Council has an interest in. And we've just noted in there, and I think it was probably considered by the previous council, to be fair, but the restructure of RSHL late last year into the Te Uru Kahika, which is regional sector shared services organisation. So this is really a report on activity within the company prior to that restructure and refocusing, which it's fair to say is still underway in terms of understanding that strategy from the sector overall, how that will direct activities for the company. Through that restructuring, more regional councils have come in as shareholders into the company. And so it's structured in terms of shareholding in the company, and then separately the Class B shares, which was the original structure, and around the IRIS software, which is the system that we use to support our regulatory processes and how. So the report again is there for noting by the committee. Questions in relation to it.
Thank you, Janine. Following on from that, does anybody have any questions on the RSHL report? If not, motion is that RSHL 6-month report to shareholders to 31 December 2022 be adopted. Approved. Thank you, Angela. Seconder. Goodness me, I'll second it. Thank you. Nobody else wants to. I'm sorry, it's boring
stuff.
Riveting information. All right, all those in favour? Passed. Thank you. Carried. Item number 18, resolution to exclude the public. Do I have a mover for that, please? Thank you, Councillor Story. Thank you, Councillor Strange. Thank you. Just told while William gets in charge,